Oh, bank collapse. That's Brad. What are we talking about with the bank collapse? Let's see if I can do it justice. Brad will. So this week we had 4 of the top 5 major banks in the
Wall
country.
Street's biggest banks.
4 of Wall Street's biggest banks take quite a hit on the stock market price or on the stock price. What they drop about 15%. Is that right?
Year-to-date losses are staggering with downward trends ranging from 15% to 24%, causing significant concerns for investors and overall markets. But I don't want anybody to fear. I know that sounds bad. Sounds really bad with what Sam Bankman-Fried. What was his bank?
SVB. Was that it?
That was bad. We had Lehman Brothers. That was bad. Enron. Other financial collapses. Right? Those were all bad. It sounds scary. That's what I'm thinking. Yeah. But folks, under Bidenomics, the unemployment rate has stayed below 4% for 20 months in a row, the longest stretch in 50 years. No one thought it was possible, but I know better than to underestimate the American people.
Well, that's promising. So, one thing I'll add is that this year, sorry, I didn't mean to cut you off. One thing I'll add is that this year, the 5 largest banks, except for JP Morgan, cut 20,000 positions because of, I guess, just revenue decreases and downturn in the economy. So and that's about the size of the city of Houston employees. But
20,000?
I think we're at 23,000. Yeah. But
so they cut the city of Houston.
What's that?
That work for the city of Houston, that their paycheck is from the city of Houston.
Jesus. Yes.
That's awful.
Yeah. I had that stat down, but here's the thing. I've been hearing since 2012 that we're going to have this big economic collapse from the Peter Schiffs of the world, who I love Peter Schiff. And it just it never pans out. Here's where I'm at on it. I would not be surprised. I would not be surprised if we saw a market correction to pre-COVID highs. That whole rally after COVID was all inflationary. So I wouldn't be surprised if we saw some sort of a collapse. It's like 35% today. If it dropped 35%, that's pretty significant. But the fact that banks are losing revenue is not a surprise. Interest rates are through the roof. Banks are in the business of lending money and charging interest, and people aren't taking out loans. So that's not a big surprise to me. I think that what people think is we're going to have a recession in Q4 or Q1 of next year. And I think all the economic data is pointing to that, despite Bidenomics telling us different. I mean, we saw a 4.9% increase in GDP in the third quarter, but it all started to slow down. If you look at consumer spending stats in September, gas consumption went down, way down. People buying retail sales went way down. It's starting to slow. And the GDP number is mostly just inflationary. People are just spending more money on the same amount of things. And we got credit card debt all-time high. We have our savings rate right now in total dollars for the whole population is below 2009 levels. All this to say, I think we're going into some sort of recessionary period, but is the world going to end? I mean, I don't think so.
It's just the beginning, man. What are you talking about? The world going to end. This is going to usher in the new era
of CBDCs and.
Yeah, bro. Have you ever heard of Bitcoin? It's going to the moon.
I'm on that train. I'm on the Bitcoin train. My eyes are lasery.
Oh, hold on. Let me get this internet kill switch. 1 second.
I already told you it's on cold storage.
And what are you going to do? It's on cold storage. The internet doesn't work. It's internet money.
They're not taking down the internet forever, man.
Yeah, they're going to take it down. They're going to take it down long enough for you to lose that cold storage fob that you have, and then you're going to be, oh, why did I even have that? I should have gold.
I have gold, man. I shouldn't be divulging too much.
Where's your gold? Where do you hide it?
In a safe.
Ooh, I'm going to crack it. Charles, what are you going to say?
I was just gonna say, Michael was ratting off his stats. An interesting stat I had, and this was last week. They came out with the highest foreclosure rates in Q3. Guess who led the list? Just take one guess.
Highest foreclosure rates?
Yeah.
Phoenix.
I mean, I want to say because of the nature of this podcast that it's a Texas city.
You're getting close.
And I'm getting close because it's a Texas city or because it's close to the Texas border?
Because it's a Texas city.
Well, I mean, you live in Houston, so that seems like the obvious answer, but Austin is kind of crazy, but I haven't read that about Austin. I feel like I would have read that. I'm going to go with Dallas.
Houston.
Damn it.
Which is shocking because we've typically been a very affordable city. So we led the list with foreclosure rates. Next up was Atlantic City, New Jersey. Not surprising if you've been to Atlantic City. But the bottom three, Cleveland, Bakersfield, Cleveland, Ohio, which is, I mean, the Rust Belt's been doing all right, but certainly more affordable than many major cities. I'm surprised to see that one. Bakersfield, California, and Columbia, South Carolina round out the top 5 list. And so overall, they were saying that foreclosure rates were very high in Q3, which is, not great. But
I think I've heard that song before, right? Well, the foreclosures and something happened, right?
What was the number?
It came out recently.
Houston was I forgot the total number, but it was 1 in 371 mortgages. I think it was.
Yeah, in 2008 it was 8%. So we got a long ways to go.
8%.
Yeah, I think so. That's right.
Well, like I said, don't fear because unemployment has stayed below 4% for 20 months. So
the other thing with the housing market, is that we don't have we have fixed rates. That's not the variable rate system that they had in 2008 that triggered all those defaults. It's a totally different climate right now. Plus, ain't nobody selling their house right now. There are 1 million less houses on the market this year compared to last year at the same time. And the reason is because people are locked in at 3, 4, 5% on their mortgage. They're not going to go try to sell a house now and then get in at an 8, 9% rate.
Well, I think I'm just going to wait for the crash and start buying houses in cash.
Yes.
You don't wear shirts like this and hang out with these two dudes without having just tons of cash, right?
I guess not.
Give me a break.
Well, another interesting stat, and so I'm taking all these from my favorite Twitter account, Unusual Whales. These are the average monthly mortgage payment is 52% higher than the average monthly rent on a house or apartment, the highest amount since 2008, per the Wall Street Journal. So
say that again.
The average monthly mortgage payment is 52% higher than the average monthly rent on a house or apartment, and that's the highest it's been since 2008.
So the rent is higher than a mortgage.
No, mortgage is higher than rent.
Mortgage
is 52% higher than rents.
Is that? I feel like that's normal. Is that not normal? I don't know.
They said it's the highest amount since 2008.
I feel like you're always going to pay more for a mortgage than rent. Maybe. I don't know. Is that silly?
I don't think.
It's probably for equivalent size bedrooms, things like like that.
Okay. Yeah, I mean, I feel like I read that and I was like, I don't get it. Is that? But I'll take their. I know they're not just like putting up this random thing, being like, "Hey, this is great news."
But here's what's going to happen: is that market's going to correct some amount. We're not going to crash. Is my guess is the probability. It's not going to be a crash. We're coming down for sure.
You're so blue-pilled.
And then the Fed is going to turn on that spigot, gentlemen. They're going to come in. They're going to decrease rates. They're going to start QE again, and inflation's going to shoot through the roof. But so will asset prices, and a bunch of people are going to make a bunch of money. Whoever buys when we get that correction, when they come back in and start QE again, prices are going to shoot through the roof. So buy the dip.
My plan was actually good.
Yeah, buy the dip. But you can't predict the dip.
Oh, yes, I can.
So start allocating some of that cash, not today, but like next month. And then on the way down, track it on the way down. Dollar cost average. Let's go.
Next allocating it to what next month? I'm talking about buying houses, dude. Give me a break.
housing prices probably have a little bit more to come down than stock prices, but
I'll show you. See how it's done.
maybe you can buy my house.
But yeah, I don't know if I'll let you rent it, but I'll kick your ass out.